Are you trading too much and winning too little? Then this strategy is for you because it only signals when all conditions align, forcing you to take quality trades only. If you're swing trading, you need three different things. Number one, clear momentum signals. Number two, support zones. Number three, trend confirmation. Our first indicator gives you precise entries, while the next two act as your guides to market structure. When used together, this strategy legitimately has a 90% success rate. Layer 1 is momentum, so open TradingView and find the Hull Suite by In Silico indicator. Here's the exact setup. Come up the top here and click on Indicators, and then just type in Hull Suite. You can see the first one here, Hull Suite. I like to favorite it and then just click on it. Close out of this, come up right up here, and then just click on the cog for the settings. We need to make one change here. We're going to change this 55 where it says length. We're going to change this to 150 and then click OK. Also, we need to make sure that we are on the 2-hour BTC USD crypto chart. Come up here, make sure this is Bitcoin USD and on the crypto chart only. We can also see up here it says 2-hour. If we click here, it's on 2 hours. It's not on 4 or day or anything. It is 2 hours and specifically that. Why are we using this chart specifically? It's because it gives us accurate market pricing in real time as opposed to when we're using, say, a Binance or Coinbase chart. And here's how we read it. With Hull Suite, this indicator, you can see it's green. We've got this green candle right here. It's above the line, it's green, we let it close, and we could open our trade from this point on right here. You must follow that, otherwise you stay out of the trade. The green line means possible trades, and this red line over here, this means stay out. Let's look at this example. See this zone right here above the HMA 150? This is tradable. And of course, if you did enter this trade, you would be up a pretty decent amount. Of course, you can exit whenever you like, but you could have been up around 21%. And this was just in 8 days. Here's another example. Everything turned green and up we went. If we zoom in, we can see it goes from red to green. We're above the line, so that's good. We let this one green candle close. After the close, then we could start our trade from this point on. This was last year in October, but in less than a week, we would have had gains of 30% almost. Also, before we go any further, you can of course do this with leverage. If you understand leverage, if you understand taking profit, if you understand stop losses, but you can also apply this specifically with just spot trades as well. You could buy some BTC at jupe.ag, just hold it and then sell it later on. Or of course, you could use the perps dex at jupe.ag as well. Now let's look at this zone below. This means that we're waiting for the red line to turn green. Of course, you could have put on a short, and if you put on a short, you would have done quite nicely. However, right now, if you want a short, you probably need to be a pretty advanced trader, just because even with small pullbacks, ultimately it's a very upward trending market. Now let's check this out. This is the end of November 2023. When traders followed these simple HMA rules, they caught Bitcoin's move from approximately 38K to 45K. This is around an 18% move that most traders completely missed. By the way, disregard the fact that I'm using this stop loss and take profit indicator. You can set your own stop loss, of course, based on your own trading style. Ultimately, what I'm trying to show you here is that the upward movement was significant, and the Hull Suite indicator, it showed it perfectly. However, there were times when the trades didn't go all our ways. In the following examples, the line briefly flickers green and then comes back to our break-even points, even hitting the stop losses. It's important that once you have the trades open, you need to manage the trade effectively so that the market doesn't take all of your unrealized gains. As a general rule, of course, educational in nature, but for trade management, we should always book partial profits once it reaches the first take profit level and keep the stop loss at break even. We aren't covering stop loss and take profit levels in this video. You may want to start small at 3 to 5% for a stop loss and higher for a take profit. However, research this yourself to work out what works with your trading style and your portfolio size and your level of risk tolerance. Let me show you this in more detail. This green candle, it's in the red section, so that is not relevant. Then we have two reds, red, red. We do not start a trade here. Then we have one green. At this point, we could start and actually open a trade. Of course, we could have made a very small amount. We could even made maybe almost 2.5%, around about that. However, we actually are aiming to close when it flickers red, unless of course we take profits earlier. In which case, once it flickers red, that's when we're probably selling and we're actually losing about 2%. Here's another example. First green candle that would close and then we would open somewhere around here and maybe we've booked in some profits at 3%. Or if we have a look, we're going to be closing it basically down around here, losing almost 0.7%. Now let's have a look at this example. Green candle, we could have probably opened it here or here, and then we go up 7%. So maybe we took some profits earlier, depending on your risk management, of course. And then we come over here. We're actually waiting for it to flash from green to red, and that's our indicator to close the position. At this point, we could have closed the position around about here, and we would have been up 1.53%. So still up, but we could have taken some profits around this time. Let's have a look at this example. Green line here, good. We're above, good. We've got a green candle. We let that close, and then we can open the trade. So we've opened the trade. We've gone up 1.25%. Once again, we're not giving any educational material on where to set your stop loss or if you're going to raise it up, but we can see we're probably not going to close the trade for 1.25%. However, then what happened with this one is if we were going to watch the indicator directly, as soon as it flickers red, at this stage, we could now potentially be down for around 2.5%. Let's look at some of the other examples from Solana. It's also important to note that some months are choppy for the crypto markets, especially May or September. And most of the time, the alts, the larger and smaller ones, follow the BTC movement. So we look for buy signal and momentum on BTC first, and then we hunt for alts. Here are some examples of low volume and sideways uncertain markets. Now we all know what happens in sideways markets. It's recommended to get in fast and out of the trade fast as well. And we're looking at BTC. In the following example, Solana, 29th of May, 2024. As soon as you'd see a buy signal on HMA, you'd do the first entry. So this is putting our entry in at this stage. It's green. However, then things start to come on down. You would keep some dry powder for your DCA. Sometimes you may want to put 50% in the first position and then 50% in the next position, but you may have a different strategy. Because your DCA would still make your average position better and you'd still be in small profits, keeping the market conditions in mind. If you compared this to BTC, you may see there's some sort of strength, and you may even decide to DCA a little bit, maybe split it up into a couple of different trades when it's even red right here. As it's at a lower point, you can then make up the profits afterwards. This is one option. You don't have to do that option. Now here in this example, 8th of August 2024, BTC gave a buy signal on the HMA 150 right at this time. We can see it went until the 14th of August, came down a little bit, and then it started to climb on up again. Now, one way that you could have played it, if you're trading the Sol chart, of course, you've first checked BTC, you can see that it's moving up. And with our Sol chart, we're probably going to go in and out for quick profits. Otherwise, the market could have chopped and then taken all the profits back. So we enter at this point, we could have taken profits maybe at this stage or maybe a little bit earlier. It's up to you. We also had the option to DCA down at this stage. We'll learn more about that afterwards. And a DCA down here would mean we would have gone slightly higher, slightly higher. But the important thing to note is you have to keep in mind the BTC buy or sell signal on that chart specifically. Here's another example on Solana, 8th of April, 2024. So sometimes the 2-hour chart, basically it's noisy. It shows a lot more volatility. Here, we've got a green hull sweep line. There isn't much movement in it. And we want to work out, well, this is kind of breaking down. We're coming up again. Is this going to potentially hold? What we can do is we can go to the 1-day chart to see more of the trend. What we can see here is down here, it's gentle. Then it goes quite steep. Like if you imagine an S like this, a big S, and then it starts to level off, suggesting that maybe momentum is actually leaving here. This is giving us a clearer picture. Then you can have a better idea of when to actually open longs. If we open a long at this point, we would have missed this green candle. We would have waited for this one. We would have waited for that to happen. Then we would have come like this, and we would have gone straight down until we would have closed down here at about -3%. But if we looked at it here, we would be able to clearly see that momentum is actually leaving the market, and there was indeed a bigger breakdown of price. In other words, this was a false signal. Let's also look at the Ethereum September 2022 chart, as this is another large token. Let's look at this from another perspective. When we see a broader view from the 1-day time frame, we can see how steep or gradual the angle of the curve is. As an example, this is a steep angle. The price comes from here, it goes up quite high. Over here, as an example, this is a very gradual angle. Doing anything here is probably not worth it. Then after we've had a look at that, we can trade on the 2-hour timeframes and make decisions accordingly. A steep curve generally indicates a strong trend. Layer 2, support and resistance. Next up, our next indicator is Bullseye Borders by Cosmoverin. This shows you when to buy low and sell high, but it's important to note that these show the key price levels, and it should be used as a loose guide, not absolute points. So once again, come up to indicators, click on this, and let's just type in Bullseye Borders. Bullseye Borders right here, I'll favorite it and click on it right like that. Close out of this. Now let's go into the settings up here, Bullseye Borders into the settings. We want to change the DC length to 130. Then click on Style, and we want to uncheck everything except up 3, down 3, short area, and long area. Unclick, unclick, unclick. Up 3, good. Down 3, good. Get rid of these. Short area and long area. And now click OK. Let's look at BTC May 2024. When the price hits, enters, taps the lower bullseye zone, potential buy. When the price hits, enters, taps the upper bullseye zone, it's a potential sell. Remember, it's just another indicator to add to your arsenal. Of course, you may want to sell some here, but you may want to hold some and then sell some here and then sell some here. It's important to add at this point, even when both indicators perfectly align, sometimes the market has other plans. So let's look at an example where the strategy didn't go our way. So sold price was around $19. The HMA line, it turned green, red to green. We had a green candle. It came on down. It touched in the bullseye border. So the price did a brief move up, maybe up 3% or thereabouts. And then at our sell signal, where it goes from green to red, we could have basically closed for around about break even. But if we didn't close, it would have come crashing down and it would have hit our stop losses. The point here is trading is a game of probabilities. It's important to stick to a strategy and have discipline when trading. Even if some of your setups hit your stop losses, you'll be profitable overall sticking to one strategy in the long term. As mentioned before, be sure to check the BTC chart for confirmations. Now the next indicator to finish off. If you have TradingView Pro, this next part is crucial, the MA ribbon. The shapes of these ribbons give you a good view of the general market sentiments. Here's the setup. Up into indicators, as usual, type in MA ribbon R2 by Just Uncle, favorite it, click on it, and close out. Come into the settings, go to inputs, and let's make some changes. We'll set fast MA type from EMA to SMA, length to 150. We'll set slow MA type to SMA, length is 600, and scroll on down and toggle on Show MA Cross Alerts, and now just click OK. If this is your first time learning about trading, I understand there's a few things that have been covered here, but this is a good base foundation for you to work off. Red, bearish. Green, bullish. Golden cross, bullish. To make it super clear how this indicator works, we've created a big circle that shows where the golden cross happens, which generally indicates bullish price action. Now we have the death cross, where the fast MA crosses below the slow MA. This is bearish momentum. And when the death cross happens, SMA fast crosses below the SMA slow, generally indicating bearish price action. This visual is to show the momentum and not to be traded with solely. If you traded with this solely and you just saw this as green and you thought this was bullish, then, well, you wouldn't have done very well, would you? The price then ran up, but then we had this death cross, and at this point, even though the hull line indicator is still green, and you'd be in profit here as compared to down here, you can still keep this in mind because all of a sudden there is bearish momentum. So seeing this particular death cross, maybe closing out the trade was the best idea. This, of course, down here was the buy signal. And if we put it all together just in this picture, we didn't really have a lot of time. It flashed green, fantastic. It didn't come down and touch our bullseye borders down here, nothing like that. We would have let this candle completely close because that's our rule. And then we would have entered here and we would have been up only 3.7%. If we entered at this stage and then held all the way to this point here, it would have flashed red and then we would be basically at break even or slightly below. A pro tip from Catoshi, don't trade just on crosses, especially in sideways markets where they can mislead. Use them to confirm what mainly Hull Suite and then Bullseye are telling you. Now let's combine everything. You can save this setup with Command S on a Mac or Control S on a PC, or just come up here and save the layout. Remember, you're on the 2-hour BTC USD chart. Why Bitcoin? Largest market cap and least volatility. Here's a critical point about risk. Stick to coins that have over $1 billion as a market cap, are older than 1 year, blue chip coins like Sol, BTC, and ETH. As discussed before, it's better to dollar cost average your entries and keeping some dry powder for any price dips that happen. This prevents you from being stuck in a full position too early. It's recommended you see the exact momentum on these indicators on the 1-day time frame and then switch to the 2-hour to know the trend. Remember, older coins with higher market caps mean less risk. Yes, new meme coins are tempting, but they're far riskier. Also, when looking at other coins, consider BTC movement as well, because all coins are usually dependent on BTC. That's the complete setup. Use the HMA first, Bullseye Borders second, and a reminder, Premium TradingView is needed for 3 indicators. And TradingView is always on sale for Black Friday. So we'll put a link below so you can make sure you can get it then for a nice discounted price. Wait for the clear signals, follow the strategy as we've gone over. Remember, this is not financial advice. I'm not a professional trader. Catoshi is. However, this is just one video and it's educational in nature. It's a great start to your trading journey. The key is consistency. Even if you don't hit take profit regions on a few trades, you'll be profitable in the long term. Good luck with your trading, and a big shout out once again to Catoshi, whose Twitter is linked below. He's part of the Jupiter community and has spent lots of time teaching us this strategy. Cheers, Catoshi. Remember, you can trade at jupe.ag, and happy trading.